Hello folks, today we will learn how to identify low probability conditions. What does low probability mean? It means that price will just be hard to predict. So it will probably move in consolidation and it will take out many highs or lows, or it just simply will leave equal highs, equal lows, and it will just do certain things that are usually uncommon for the market. So the first and I think the most simple way to identify low probability conditions is when you see two SMTs form on both sides of the market. This represents price action before New York AM session, and all of that is New York AM session. And if you see by the, I think like 10 o'clock two SMTs form, expect low probability conditions. The second way is if you really see big directional move at the opening range, then as I've taught in, I think in the first lesson, that after expansion there will be retracement, reversal, consolidation, and usually it's just a retracement, and you will see something like this happening. So obviously you don't want to trade it because it's very slow, and probably you will not have a setup here, and you can easily get trapped into trying to chase shorts or whatever. So you wanna wait at least until 10:30, but it's better to wait until 11. Usually after 11 the price action gets normal and you can trade. The third way to identify low probability conditions is to see if we've moved a lot during London session. If London session exceeded 80% of 5-day daily range, so like average range from the previous 5 days, and you take 80% from it, if London session exceeded it, you don't wanna trade New York AM session. You can find average daily range indicators in indicators tab. I will not show it to you because there are many, so you can check it out yourself. The next way to identify low probability conditions is when we had a large range day. Another way to identify low probability conditions is if we had a large range day before. So it's around 400 points, but simply if we had trending day, you will clearly see that it was trending day, and after that we will probably consolidate or retrace. So I would skip that if you're a complete beginner, but what I want you to understand is low probability conditions doesn't mean that you cannot trade them. It's just better if you're a complete beginner to avoid these days and just tape read them, and then eventually you will learn how to trade them, because there is actually no such a thing as low probability, it's just different. It just moves different. There is no low probability, and you can just tape read and learn yourself how to trade these low probability days. Another way to avoid low probability conditions is avoid Mondays that have no red folder news. So basically high impact news. If on Monday we have only orange folder or no news, you avoid that day. Also, if you have bank holidays, you don't want to trade it. Another case when we will have low probability conditions is before Fed Chair Powell speech, before CPI, so one day before Fed Chair Powell speech, one day before CPI, on an FOMC day, Thursday of NFP week, so a week when we have NFP, Thursday you wanna avoid, and usually Friday, but if you're a complete beginner, just tape read Thursday and Friday, but actually Friday sometimes moves really well. Another way to identify low probability conditions if at the market open we took out both sides of liquidity. We will typically just range in the between the high and low, so it will look something like that till the end of the day. And the last thing that I wanna mention, it's not really about high or low probability conditions, because it's just a term to make it easier to explain. But if you're struggling to read price action, so before you took a trade, you simply struggle to get where the price goes, so you make assumptions in your head and they're always wrong. I would recommend you to avoid that trading day, because it's really obvious that you're not able to read price action well enough to trade. There is nothing wrong in not trading, simply skipping a trading day, and that's basically it. There are also a couple ways of identifying low probability conditions, but they're not that, but they will not appear that often, and I simply don't use them. So if I don't use them, I will not teach them. I wish you good luck and good trading.